Hi everyone, Marv Eisen here from Timeless Dollar. As you probably know, trade setups are based on price patterns, and there really aren't that many trade setups that you need to learn in order to trade. In fact, you can get very confused going through some trading courses that are so long and that contain so much information that you lose sight of the big picture. And I'm going to talk about that big picture today. Now, again, there aren't that many trade setups, and those are the gap, which is probably the most visible trade setup because it's based on where the market closed the previous day and where the market opens. And we can see if the market is opening anywhere near the previous day's close. It's a very visible price pattern that we can determine before the trade actually occurs. Support and resistance trades, well, those give us some insight into where the market may go based on support and resistance that it put in previously during the trading day. Time and price trades, sort of difficult to determine. Momentum trades, they're great trades, but you have to be very quick and you have to be fortunate that you're not trapped in a stop running move. Trend trades also are similar to support and resistance trades because we can see them as they print on our chart. But then there are candlestick signals. Now, candlestick signals, of course, are the basis for technical analysis. And candlestick signals basically tell us where prices have been, and we can base our trading decision on the candlestick signals that we've learned when we learned how to read candlesticks. Now, many of you probably forgot how to read basic candlesticks. But I want to show a point on how candlestick reading, particularly in the big picture, is important. And I'm going to reference the one-day chart of the S&P. This is the S&P one-day chart, so there's no overnight action on this chart. And I want to call your attention to the last three candles, okay? This is Friday's candle, Friday May 13th. This is Thursday, May 12th, and this is Wednesday, May 11th. Now, typically, candlestick signals in a one-day chart can give us some good insight into where the market is going based on the current trend. But the real telling aspect of where the market character would likely change was right here between the candle on Thursday the 12th and Wednesday the 11th, right over here. And as you can see, this candlestick pattern is called meeting line. Well, not quite a meeting line, but if you recall your candlestick trading, meeting lines are when prices are in a trend. In this case, it was a decline, and there is a substantial gap between where prices open the following day and where prices closed the previous day. Now, here we have a significant gap where the prices closed and where they opened. And the meeting line is where the open comes up and, well, actually, it should actually meet the close of the previous day. It doesn't. And if it was a piercing pattern, it would close above where the price closed the previous day. But still in all, this was an indication of a very high likelihood of the pattern, of the trend rather, changing. And I sent out an email to those subscribers in my Trading Zone service. I send an email out with a market commentary, and I called their attention to this daily pattern that's set up. This meeting line is a very strong indication that a reversal might be in order. And it's not necessarily so. The general rule is that it needs to be confirmed the following day's candle. And the following day's candle here, Friday, as you can see, it really shot up substantially. So it looks like the market is in for a bit of a recovery, and we'll hope that happens. But basically what I'm trying to say is, as you look at the day-to-day charts on your 1 minute or 3 minute or 5 minute candles, review the daily charts on your one day candle. And if you're trading the E-minis or the micro E-minis, look at the S&P. Don't look at the at the E-mini, daily E-mini or daily micro E-mini, because it's going to give you the overnight pattern. You just want to see the pure S&P without the overnight. So that's my video for today. Thanks so much for watching. Trade safely, use a lot of patience, and I'll see you in my next video.